More of the same this week, as nothing really changed in the market. I'm Tony with Clarkson Santoro, and this is your real estate update for February 17th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. The current inventory is 16 homes, up from 14 last week. The average asking price of those homes was $2,631,000, which is down from last week's average of $2,663,000. 4 homes asking an average of $1,742,000 went pending this week. That is less pending homes than last week's number of 6, with a higher average asking price from last week's $1,586,000. A total of 3 homes sold this week, with an average sales price of $1,933,000. That average was up from last week's average price of $1,445,000, and the total number of sold homes was higher than last week's too. So now that we know how the market performed this past week, we can look at the broader trends that give us insight into the health of the market and help us understand where it might be heading. But before we do that, if you find this information helpful, you should subscribe on YouTube or follow us on Instagram so you won't miss the next update. You can also share this with a friend so they can be informed on their local market as well. Now on to the market indicators. Inventory came up a little bit this week to 16 homes. That number is still well under the average number of homes in San Ramon. Last year, we only had 19 homes on the market at this time, but the turnover rate was much higher, at about 200%. The average asking price of last year's inventory was around $1.6 million, while today it is at about $2.6 million. So, we are still seeing a significant difference in the market today, where homes over $2 million are just taking longer to sell than their lower counterparts. Last week we pushed the inventory indicator up to 83, and we are pulling it back down to 80 this week. The turnover rate, like I just mentioned, is not nearly as fast as last year, but the good news is it is above 100% for the second week in a row. Remember that with a small sample size of low inventory, any minor movement in the market can drastically swing the turnover rate. As long as we stay within 20% of the neutral 100, I think it's safe to call this metric neutral. Last week, we had this indicator rated at 53. It will soften slightly to 52 this week. Like we discussed last week, the over-under sales price has continued to improve this week. We are now averaging a sales price of about $36,000 under the asking price. That will probably continue to improve as we start seeing the other homes asking under $2 million that went pending in less than a week. We are now a little more than 2% under the asking price. If we are within a 2% margin, that really points to a normal or neutral market, and we should be there soon. The over-under indicator received a score of 37 last week, and we will improve it more to 39. The closing price came up this week after seeing several weeks of lower averages. The 30-day average should be a smoother line, but with a significant price difference in active homes, home prices, and pending home prices, it is not surprising that we have seen big shifts in value week to week. If one of the active homes that average in the 2.6 range goes pending, then we can quickly bump up the average cost when it closes. Last week we gave this indicator a score of 58 and will move up slightly to 59. The Silicon Valley economy continues to look like it is getting healthier. The big concern lately has been job security, with massive layoffs being announced across some of the largest tech companies in Silicon Valley. The good news is that there has been less talk about layoffs lately, and the QQQ continues to improve back to levels almost equal to where it was 6 months ago. Last week we scored the Silicon Valley indicator at 35. We are moving it back up to 37 this week. Interest rates jumped up by another 20 basis points. We were trending down for a while, but it looks like the Federal Reserve continues to increase its rates and the mortgage rates are following that trend. We are now back up to 6.32% as a national average for a 30-year fixed mortgage. We had the interest rate indicator at 39 last week, and it will drop to 35 this week. Overall, the outlook didn't make any big moves this week. A few indicators moved up, a few moved down, I think the most interesting market stat this week continues to be that nearly $1 million price difference between the average active home and the average pending home. That points to that split market I was talking about last week. Seller's market in the 1.6 million range, buyer's market at anything above 2 million. Last week, we gave the overall market score 50, and we will have it remain there this week. I hope this weekly summary and commentary helped you understand how our market is affecting your options. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate the market to sell or buy a home. And if you find this information helpful, remember to share with a friend and hit the like button and subscribe so you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.